This week, markets will be getting ready for the ECB's meeting. The regulator will hardly alter its monetary policy. Nevertheless, traders are closely monitoring the information provided by statistical office of various countries. In our video review, we will find out how this flow of information may affect the currency market. Early on Friday, economists had supposed that EUROZONE economic growth might slacken to 2.8% from 3.9%. However, after the beginning of the US trade, the forecast was upwardly revised to 4.2%. Against this background, the markets stagnated, waiting for optimistic data from the Eurozone. In fact, the market needed such data since during the whole week, the US dollar was gaining in value, thus reaching overbought levels. That's why analysts had expected a local correction, which needed just one reason to start. As a result, the GDP data acted as such a reason. The Eurozone economy expanded by 4.6%, thus boosting the euro and the pound sterling. However, the rise in both currencies will hardly change the market situation. The fact is that it's just a local rebound that is likely to be followed by a further increase in the US dollar. Notably, the US GDP growth rate is a bit faster than in the Eurozone. Let us focus on the trading charts. After a rapid decline, the euro-dollar pair stagnated below the support area of 1.1160 and 1.1180. This points to a change in the market sentiment that may lead to a corrective movement. On the daily chart, we see that the trend, which began in June 2020, is becoming longer. As the result, the price returned to the levels recorded in the mentioned period. Neither stagnation nor correction may affect the global trend. If the price consolidates above 1.1180, the forecast may become true. In this case, the price may climb to 1.1210 and 1.1260. Otherwise, the price may hover within the range of 1.1120 and 1.1180 longer than expected. Meanwhile, the pound-dollar pair slackened near 1.3357 and then rebounded. Judging by the recent decline in the pound sterling, an upward correction may start. When analyzing the price movement on the daily chart, we saw a gradual rise in the bearish interests. The quote has already lost almost 60% of its recent rise. In this case, an upward correction may return to the price to the level of 1.3500. How is trading going to unfold in the short term? We will definitely tell you in our next video reviews. Don't miss them and stay up to date with the latest market news. See you!